Hello, financial adventurers. Franklin Green here, ready to take you on another thrilling journey towards financial freedom. Today, we're unlocking the mystery of how the stock market works. If you've ever wondered how people make money from stocks, or if you're just getting started, this video is for you. Let's dive in and discover the secrets of the stock market. What is the stock market? The stock market is a place where companies sell shares of their business to raise money. When you buy a share, you're buying a small ownership stake in that company. Think of it like an auction house where the most valuable companies are up for grabs. Investors buy and sell shares, hoping the price will rise. But it's not just about buying low and selling high. It's about understanding the forces that drive the market. How do stocks make money? There are two primary ways investors can make money from stocks: capital gains and dividends. Capital gains. When you buy a stock and its price increases, you can sell it for a profit. Dividends. Some companies pay you a portion of their profits just for owning their stock. For example, if you buy shares of Apple and the stock price rises, you could sell your shares at a higher price, earning a profit. Or if Apple pays out a dividend, you get a cash payment for being an investor. The basics of stock prices. Stock prices are influenced by many factors, including company performance. Strong earnings can drive the stock price up. Market sentiment, the overall mood of investors, optimistic or pessimistic, can impact prices. Economic factors, interest rates, inflation, and political events can all play a role. It's a complex system, but at its core, the stock market is a reflection of supply and demand. When more people want to buy a stock than sell it, the price goes up. When more people want to sell than buy, the price drops. The role of stock exchanges like the New York Stock Exchange, NYSE, and NASDAQ, are where stocks are bought and sold. Think of these exchanges as marketplaces where you can trade ownership in thousands of companies. The process happens through brokers and platforms like Robinhood, eStar Trade, or Fidelity, where you can place orders to buy or sell stocks. Risk and reward. Understanding volatility. The stock market is often volatile, meaning prices can swing up and down. While this volatility can create big opportunities for gains, it also means that you could lose money. But remember, investing isn't about timing the market. It's about understanding that markets rise and fall over time, and staying patient. How to get started in the stock market, ready to dive in. Here's a simple guide to getting started. Start small. You don't need a fortune to begin investing. Platforms like Robinhood or Vanguard allow you to buy fractional shares, which means you can own a part of a company like Amazon without needing thousands of dollars. Choose a strategy. Will you invest in individual stocks or go for index funds, which spread your investment across hundreds of companies? Educate yourself. The more you learn, the better you'll be at making informed decisions. And there you have it. The stock market isn't just for the wealthy, it's for anyone who's ready to take control of their financial future. By understanding how it works, you can start making smarter investment choices and potentially build wealth over time. If you found this video helpful, don't forget to hit that thumbs up, subscribe to Sapo Franklin, and share your thoughts in the comments. Have you started investing in stocks yet? Let me know your experiences. Until next time, stay smart, stay strategic, and keep hopping toward financial freedom.